A hectic day of news flow for Indian markets. We had key numbers, big tariff hike by telecom companies, massive downgrades for HUL, and sharp selling in high beta stocks. But despite positive and constructive news flow, Indian markets are looking rusty and toppy. And the only thing that has increased in last 1 week is volatility. So what is fueling volatility and weakness in momentum stocks, and what's in store for Indian markets in the near term? We'll discuss that for you in this edition of Markets Tomorrow with Sanjay Dutt, Director of Quantum Securities, Varun Goel, Head of PMS with Karvy Wealth and Stockbroking, and to give us understanding of the technical setup, Sandeep Pagle will join us. He's Managing Director of Aptar Technical Advisory Services. But before I bring on board my live market guest, here's a look at how Indian markets moved for the day gone by. Nifty has managed to close above 6,050, but it was indeed a race to the finish because Nifty barely managed to escape through and close with some green on the screen. Nifty has recovered from the day's low, so one would argue that there was some buying in the last half an hour of trade. There was big move in telecom stocks. We'll discuss that sector at length. OMC stocks were today under pressure across the board. The big loser was the real estate index. Now, real estate as a sector is largely dominated by retail investors or HNI investors. So one is getting a sense that more than institutional crowd, it's the local money which is getting slightly nervous. It's also evident because today the small cap index has managed to underperform the large cap index. High beta stocks have also reversed. So apart from real estate, we saw a profit booking in metals and some key media names as well. HUL is now down 2 days on the trot. Now that is one stock which for sure has lost some sheen after a disappointing Q3. HDIL was the top traded count from both the exchanges. The stock cracked more than 14% on 20 million shares, as there are fears of promoter selling, and there are fears that the pledged holding of promoters could come out in the market because of margin issues. In terms of specific themes, Bharti, Idea, Arcom, that was a pocket of strength. Weakness, some real estate names will just pop up on your screen. And in terms of strength, I would say it was State Bank of India, which irrespective of the broader market is now moving from strength to strength. And today also State Bank of India appreciated quite smartly and closed with a positive bias. So what's the way forward for Indian markets from these levels, and why, despite constructive news flow, in last 1 week, volatility has gone up and weakness in high momentum stocks is clearly visible? Let's discuss that with Sanjay, Varun and Sandeep Pagle. Sandeep, if I look at the index, no problem. If I look at the small cap index, lot of problem.
Absolutely. I think during the day I said it many times that the Nifty is not giving you a true indication of what is happening. You have a Bharti which goes up 4%, you have a HDI which cracks down 12-15%. So very stock, very sector specific. And you can be on both sides and you can hedge yourself well and play on both sides. And there is absolutely no point in taking a call in the Nifty. That will absolutely frustrate you. It will not move beyond the 50-point band, and I think this phenomenon will continue till the expiry. I don't see the Nifty moving out. Even the Bank Nifty did manage good recovery in the end, the last half an hour, but I don't think that will sustain. At higher levels, I think selling will come in again, and it will be more of stock-specific, sector-specific moves. That is what I think.
Varun, the news flow is strong. Policy decisions have been initiated. Initial numbers have been way above estimates. Still, if I look at the market tone, what benchmark indices have done, things are looking slightly toppy, slightly rusty. Why is that?
Well, I think we are quite positive on the markets for the year as a whole. In fact, we have a very bullish 25,000 target on Sensex for December 2013. I think in the short term, what market is probably worried about is what the RBI governor wants to do on 29th, which is next week. I think there is a lot of expectations that the bond market and the equity market had built up initially. I think the governor might do only a 25 bips rate cut as compared to the 50 bips cut expectation which was expected earlier. So I think there might be some short-term ups and downs and maybe short-term volatility, but overall the market looks extremely attractive at this point of time.
But Sanjay, You are of the thought that at the current juncture, the risk-reward ratio is not that favorable. Why is that?
Nikunj, primarily basis on the fact that, if you look at the numbers, I was just reading this morning a headline on some newspaper which said about $2.7 billion of inflow have come in the last, 2.5 weeks. That's YTD January. And we were at $24 billion of money coming in, last calendar year. Even after, say, this month's 2.7 billion, 2.5 billion, the markets are just up 3% YTD in rupee terms, and Sensex is still underperforming most of the Western markets, forget some of the Eastern and the emerging markets. The problem is that we're getting a good amount of supply now at the current levels from some of these smart money who bought at the lower levels, one. Second, from the larger insurance companies, and added to that is the skepticism and, in fact, no interest coming in from domestic retail investors. A combination of these is what is really holding back the market, and this needs to turn around. And what is really worrying me is that the phenomenal supply we've seen in the last few months from some of the larger insurance companies, in fact, some of the largest insurance company who's been continuously selling for the last few months. Till we do not have the reversal, till we do not have the demand-supply equation kind of turning favorable, I think the risk-reward for equities in the short term is negative. And whatever we've seen, the rise right now in the index is primarily concentrated on a few scripts which have been, kept going up, and we've seen this 1,000-odd point rally in the last few months. So I think we are getting set for a sell-off. Beyond a point, supply won't be absorbed, so the market will crack in the short term.
Okay, the big story for the day was telecom companies, and telecom companies have finally increased the tariffs, which clearly means that the pricing power is no longer with the consumers, and pricing power is making a comeback. Varun, do you think the worst is behind telecom stocks, and do you think they've genuinely turned the corner?
I think definitely. I think going forward, we are going to see a series of tariff hikes, both in voice and in data space. I think finally we have come to a stage when the consolidation, the much awaited consolidation, is going to happen. As far as government policies are concerned, there is a general expectation that finally the government might be doing the right thing. We have already seen a reduction in auction prices for both GSM and CDMA players, and we believe that the auction should now go through. So I think overall, the next few years should be definitely much better for the telecom companies as compared to what they were in the last few years. However, we believe that the stock prices after further 5 to 10% up move would probably be running ahead of the fundamentals, and this will probably play out over a period of 3 to 4 quarters rather than in the next 1 or 2 quarters.
Varun, would you broadly agree with my assessment that as of now it's a one-trick pony? Markets are completely dependent on foreign money, and if that dries up, we really could be staring at an ugly scenario?
I think there are two things in this. One part, the first part, let me just talk about the domestic institutions, especially the Indian insurance companies. I think it is more of a tactical stance that they have taken for now, because let's not forget there is around 20 to 25,000 crores of a government money raising program lined up in the next couple of months, and we all know that if those issues don't find too many takers in the open market, it is these insurance companies which will have to pick up a large part of them. So I think they are holding on to some cash largely in anticipation of some of those issues coming into the market. As far as the FII inflow is concerned, I think if you look at the global perspective at this point of time, there is a very, very strong environment for risk on trade. We're already having negotiations about the US debt ceiling moving to April and May. We have seen a positive data inflow starting to coming from China. Europe is more like a what you call stabilized kind of a state. So overall, if you look at from a global perspective, this year 2013 definitely looks like a year of risk on. So I think with emerging markets like India continuing to show better macroeconomic data, we are going to see more and more money coming into India during the course of this year. So I would not be very, very concerned about immediate freeze or a withdrawal of FI inflows. Of course, that remains a key risk, but as of now, the global scenario doesn't suggest an imminent money pulling out by FIs.
Also for tomorrow, Exide Industries could be an exciting stock to monitor because Exide Industries, they had ventured into the insurance sector a couple of years ago. They exited that venture, but now they are re-entering the insurance business. They've picked up 26% stake in ING Vyasa Insurance. Now the problem with the insurance business is that in the near term, insurance business is not making money. So for Exide Industries, this actually could be a dampener, not a propeller, as markets suddenly would factor in the drag on their balance sheet, and because of this foray, the return on equity also will come under pressure. But Sandeep Agre, the group which I want to address with you is the entire real estate space. Real estate stocks in quick time appreciated a good solid 40 to 100% from the recent lows. But if I map how these stocks have moved in last 10 days, they've retraced nearly 20% from the recent highs.
Well, yes, Nikunj. I mean, HDL has led the pack in the fall, and that is the way they move. I mean, on some semblance of some negative news or something scary, and you see the crackdown that has happened. So this is something very, very negative about this stock, these stocks rather. And I think one has to exercise this kind of caution. I mean, till last week there was no sign of any weakness, and suddenly they gave way in the past 2 or 3 days. So and I see some more downside. I mean, the sentiment is clearly spoiled. The pattern has been clearly impacted, and I would talk of a 5 to 10% downside even from the current levels.
Okay, L&T numbers are important. It is India's biggest engineering and construction company. What are the expectations for the quarter gone by, which is Q3? Profit could appreciate by about 11% plus. Sales for the quarter gone by could appreciate by about 15% plus. But honestly, the key monitorable from L&T numbers tomorrow is not what they've done for the quarter gone by, but what they could do for FY14 in terms of order booking, in terms of organic growth, and what exactly is happening to the private sector capex demand. If L&T tomorrow maintains that in the near term there are more challenges and less opportunities, let me tell you that in a sense could really trigger a selling stampede in the stock, because L&T based on FY14 and FY15 estimates is not a cheap stock. L&T, only reason why L&T has appreciated is because markets still are riding on hope that because of low interest rates in the second half of this year, the investment cycle will reverse, and L&T because of its size will actually benefit. That to my mind is the way how you should judge L&T, risk versus reward. Currently, if the management commentary is not strong, then the reward is not all that favorable. Varun, how would you map L&T, and what do you expect to hear from them tomorrow?
I think as far as the infrastructure activity in the country is concerned, there are no signs so far of any revival in either the construction activity, the various capex, or the capital expenditure projects which various companies have undertaken. They are stuck at various levels of execution. As of now, there is no indication that there is a revival in the capex cycle. From whatever information that we have got by speaking to various market players, various infrastructure players, is that even the larger companies are bidding for very, very small orders. So the leaders of the sector would never bid for 500 crores or 1000 crores kind of orders, but they're doing it now, which really shows the paucity of fresh orders in the for the industry as a whole. So as far as we are concerned, we are very, very skeptical about the whole infrastructure and capex related stories. We would rather stay away from most of these stocks, at least for the next 2 quarters.